What is the importance of financial market in an economy? Financial market match buyer and seller at a given time and reflects the performance of the economy. Demands and supply are the function of the market. Businesses need capital to grow and to expand. Thus, here the financial market plays a critical role in the build-up of capital in the production of goods and services, providing access to capital. In well-developed and efficient market, the transaction costs are always lower with the efficient transfer of funds. It can be lower cost of financing and a safe return on investment. Whereas in developing countries which have limited financial market, the poor legal system, transparency may make it more costly to raise capital, and it may lower the return on investment or saving. A good financial market helps in the creation of wealth and provides link between saving and investment that meet the short-term and long-term financial need of both the household and corporate sector through efficient mobilization and allocation of surplus. Macroeconomic factors such as growth, inflation, business cycle have a strong impact on the financial market. Financial structures fund businesses and companies, contributing to job growth and in turn growing economic development and trade. Increased trade leads to increased competition such as sales and marketing that increase jobs in this sector further. Whether it is primary, secondary or tertiary sector, all need capital for growth, and the need for capital is balanced by the financial systems. Security is a right on the issuer future profit or assets. Usually financial markets are characterized by transparent pricing, simple trading rules, cost and fees, and market forces that decide the price of security that sell. Financial markets affect the opinion of the public and provide an outline of the economic landscape. A continuous raise in stock exchanges such as Nifty gives confidence to the businesses. In such scenario, businesses hire more employees, decreasing unemployment and in turn producing more disposable income to the common people. In case of diminishing market or in the event of market crashes, businesses become worried about their financing, making layoffs, panic in the economic ecosystem. Capital market and institutions such as bank play a key role in the economy by controlling risk and allocating savings to productive activities, facilitating economic development and enhancing overall welfare while running smoothly. The right mixture of well-developed financial market and the variety of capital products and resources available better fits the requirement of investors as well as those who are seeking capital and who have excess capital, thus fueling the engine of the economy or simply capital formation. A sound economy can exist only when there is a well-developed market. The Indian financial market has developed and it is bigger now after liberalizing policies in 1991 and is different from what it used to be back in 1980s. An efficient financial market can serve the following purposes. Number one, supporting investors managing their capital for different time horizon with financial products. It provides a source of capital for businesses depending on short-term or long-term financing requirements for both private as well as government. Minimizing risk by some strategies such as hedging or diversification. Act as a mirror reflecting the economic conditions of the country or a state. Confidence booster for attracting capital through foreign inflows or investment. Provide access to information to market participants, enabling taking precautionary measures. The financial market has become a source of a judging point on how global or national economies are performing in today's scenario. The effect of government economic policies such as fiscal, monetary can be easily observed on stock and bond exchange market. The volume of trade in stocks and bonds reflects the performance of the businesses as well as the sovereign. For example, when RBI takes the decision to increase or decrease the interest rate, the effect can be easily observed on the bond or equity market. Financial markets are used by developed economies to maintain their economic and social stability and increase their economic level. Dormant or developing economics look at financial market to finance its BOP, balance of payments, accelerating its development agenda for social and economic stability. For new economies or developing economies, the growth of the financial market depends on the reform taken by the government. Also, reforms should be in such a way that it should match the frequency of local or international level of investors requirement. Thus, they give considerable importance to the growth and development of financial sector to achieve their agent of employment generation and poverty reductions as well. Thank you so much for watching.